All right. Good morning, everybody. Good morning, all you magnificent melon heads. Happy Tuesday, everybody. Today is February 18th. I missed you guys yesterday. The market was closed and we didn't have our morning live stream, and I was just left wandering adrift in a sea of uncertainty and doubt. But we are back this morning. The markets are open. And the topic this morning, the top story. I tell you, I read a lot about this yesterday, and I still don't know which is which here. This DC housing crash that is and is not simultaneously happening. Schrodinger's housing collapse in the DC metro area. I guess if we don't look, both are true. The story broke over the weekend that there is a surge of listings and that price cuts of up to $100,000 are being seen in some of these houses. And then people came out and started to say, no, everything is normal in DC. Nothing to see here. Move along. Now, there's data supporting both. And it appears that it depends on where you draw your lines, what municipalities, how far you zoom in or zoom out. You can make the data say whatever you want. And typically what I've seen is that this narrative, it falls along the historical lines of housing bulls and housing bears. The people who have historically been bullish housing, who I would point out have been right for the last few years, they are saying all is normal, nothing to see here. And of course, the housing bears, who, self-included, have been wrong over the last few years because home prices remain stubbornly high. They have been saying, no, this crash is really happening. So we're going to look at some articles, one bullish, one bearish. You guys make up your own mind. But I did find one data point that lends some credibility to that narrative. But I'll be honest with you, even that data point doesn't make a whole heck of a lot of sense to me. So guys, you're just going to have to look at the data and make up your own mind on what's really happening here. Now, the DC metro area, that's supposed to be the one real estate market in the freaking world that is recession proof, right? It's like the running joke in DC. No matter what happens to poor people everywhere else, DC housing is always in demand because the government can print its own money. And, well, they're always hiring no matter what. So to be honest with you, the DC metro area, no offense to my DC melon heads out there, but you guys, you're overdue for a recession. Way overdue, right? Let's be honest here. You guys have gotten off easy over the last few years, while the rest of us, not so much. So we'll look at what's going on in DC housing. Also, Javier Milei, sports fans, that's what you call an unforced error, what Javier Milei did over the weekend. If you guys missed this story, there was this new meme coin. Oh boy, there's the hair on the back of my neck sticking up. As soon as I hear meme coin, I'm like, Javi, don't do it. No, he did it. Javier Milei promoted a meme coin. He tweeted out, Viva Libertad Carajo, all the stuff he usually does. And he pumped this Libra. It was supposed to be this new token that was all a way to invest in Argentina. And yay, it was going to be so great. And of course, within moments of Milei tweeting that out, the developers, you'll never guess what they did, right? You ready for this? Edge of your seat. They rug pulled the token, just like they do to every freaking meme coin. Every freaking token ends this way. People still buy this garbage. Why do they do this? Guys, meme coins. Atozi, a channel I like, he does a lot of, he covers crypto scams a lot. He also does a little bit of like internet drama stuff that I'm not so crazy about. But I really like Atozi's channel, especially since he took on BitBoy Crypto a few years ago and won. BitBoy tried to sue him and intimidate him with his lawyers, and Atozi wasn't having it. But Atozi put it very well the other day. He said basically meme coins are nothing more than implements of wealth extraction from celebrity followers. That's all they are. They are ways for developers to use celebrities to take money from their followers. I don't care if it's Trump, Milei, or Hawk Tua, or that Shkreli dirtbag. That's all they are implements of wealth extraction, and they all end the same way as rug pulls. And Javier Milei, WTF, dude, we finally get a libertarian head of state, and he proves that it is possible to reduce government spending and balance budgets. He has done the impossible, and if that gets derailed over a shitcoin, well, I am going to file a complaint with somebody. I don't know who, but somebody's going to get a strongly worded letter from me. Seriously, what were you thinking, Milei? What were you thinking? You've done so much right over the last year, and then you meme coin. Good God. All right, so that happened over the weekend. Also going on this morning, in we'll say lesser exciting news, we got Southwest Airlines cutting 15% of their corporate workforce, 1,750 jobs. That is the first layoffs in the history of Southwest. They've done voluntary buyouts and they've attrited down in the past, but they've actually, this is the first time ever Southwest has had to lay people off. The budget carriers are still hurting here, guys, and Southwest no exception. We are inside of 1 week. The deadline for Supermicro to file their now 6.5, who's counting, months overdue financials from 2024. And the stock is up another 7% this morning, the last I looked, after being up 13% on Friday. So what is going on with Supermicro? Did somebody leak that BDO is actually going to sign off on their books? Or are there really just enough idiots who believe Charles Lang is telling the truth? I mean, I guess it's possible. Like, liars sometimes tell the truth. You're like, hey, what time is it? It's 2 p.m. Oh, he's telling the truth, even though the guy's a liar. Right? It's possible maybe Charles Lang is telling the truth. But then again, Charles Lang's word is not worth anything because Charles Lang is a fraud. His company has done accounting fraud in the past. They rehired all the same people that they fired after they got away with it last time. And so the only safe opinion answer in my book is that Charles Lang is lying again. We'll find out in a week. All right. Supermicro has 1 week to file their 10K that was due last August. Will they or won't they? A bet on Supermicro stock at this point is a 50-50 bet. You might as well just go to the casino and put money down on black or red. Will they or won't they? It's a Boolean decision at this point. Also, we got an interesting story in Bloomberg this morning about Singapore. A government official in Singapore has come out and he said he's working with U.S. officials who are probing how DeepSeek got their hands on all those NVIDIA GPUs. You may recall I did a video about NVIDIA and Supermicro and their blatant violations of export controls. Well, this Singapore government official is saying that Singapore gets less than 1% of NVIDIA's GPUs and servers are actually shipped to Singapore, even though 22% of NVIDIA's sales are booked in Singapore. That means 21 point something percent of stuff that's being billed to Singapore ain't going to Singapore. Where's it going? Well, if you saw that video that I did, you know exactly where it's going. It's going to China, or at least a lot of it is. It's the world's second largest economy, and 21% of NVIDIA sales are mysteriously going somewhere. It's not hard to figure out where they're going. Also, we got argor. How do you pronounce this? Argor-haraeus. I don't know how you pronounce this. A gold refiner. They are adding charges to their gold and silver bars, and it looks like, as my friend Bob Coleman put it, it looks like the fear marketing is coming back in gold and silver. Over the weekend, I think they're out of Switzerland. I'm not sure where Argor-haraeus is actually based out of, but they put out this letter that says, due to all these reasons, we're adding charges to gold and silver bars coming out of our mint. And look, some of those reasons make sense. Some of them really don't. Some of it is just the same old, the gold and silver, the precious metals industry, just milking people for every dollar they can. And the thing that really drove me nuts about this Argor-haraeus story is the silver fee. The fee that they're adding is almost 100 times what it is for gold is what they're adding for silver. And all the big problems in the metals industry right now have to do with gold and the gold drain from London to the COMEX. So why would they be putting such a big fee on silver when silver is really just a second order knock-on effect from what's happening with gold? Well, if you factor in that retail purchases of small denomination silver tends to be more of a retail-centric product, well, then it makes perfect sense why Argor-haraeus is doing this. They're just trying to squeeze people for more money. So be careful, guys. Watch out for the fear marketing in the gold and silver industry. It looks like that's starting up again. And the CEO of Norinchukin just abruptly resigned. Keep an eye on that one. That's one of the largest banks in Japan. They were in the news last year for big losses on U.S. treasuries and big investments in commercial real estate. Now the CEO is abruptly resigning. That's one to watch. Keep an eye on Nochu, and of course the unwind of the yen carry trade remains an issue. We got a lot to talk about this morning. Let's shrink my big melon of a head and let's see what's going on in markets. And guys, don't forget that like button and the subscribe button. It's written right here on the mug, so you pretty much have to. If you're new here, hit that subscribe button and come on back tomorrow morning because we do this one every day. Right now, the S&P is up by 23 points or 0.38% higher ahead of the opening bell. The Dow is actually positive by about 36 points as well, or 0.08% up ahead of the open. And the NASDAQ is leading the way higher, 120 points, or 0.54% higher. Tech is leading the way this morning. Stocks are up pretty much across the board. Meanwhile, the U.S. dollar, I didn't get my chart ready in time. I am remiss. The U.S. dollar is 30 basis points higher, back above 107 at 107.03, slightly stronger dollar this morning. And we have got higher yields across the board here. The 30-year Treasury is up by 4.5 basis points, 4.741. The 10-year is at 4.524. The 2-year, meanwhile, 4.280, up 2 basis points. I'm sorry, the 10-year is up almost 5 points, by the way. I forgot to mention the change. And the 1 month is essentially unchanged at 4.330. That's up by a fraction of a point. Looking over at the commodities board, we've got another good morning for metals here. Spot gold is up $22.30 here, $2,920 for gold. That is up 0.78%. Spot silver is along for the run, $32.53. That's up by about 12 cents or 0.37% this morning. We've got copper, meanwhile, down 2%. Platinum is down 0.6%. Palladium is down about 0.9%. And oil is a little bit higher this morning, about 90.95% or 67 cents higher, trading at 71.39 for WTI crude. There was a pipeline attack in Russia. The Ukrainians hit a Russian pipeline with drones that's supposed to disrupt some Kazakhstani oil exports. Possibly that is contributing to some of the higher oil prices this morning. Now, speaking of the gold price, I wanted to talk about this one. This is that argor-haraeus story that I was telling you about. Now, I apologize for the small font, guys. I can't blow this one up at all. But I just wanted to read this because this really bugged me this morning. All right, it's a few days old. This memo was issued on February 13th. Dear valued partners, in light of the current economic climate, we are witnessing unprecedented challenges, persistent inflation, geopolitical uncertainties, and exceptionally high interest rates up to 10 times above historical norms are significantly impacting market conditions. Guys, he's just talking about generic macro stuff here, nothing to do with gold and silver, just persistent high inflation, geopolitical uncertainties. These are multi-year-old stories that argor-haraeus is citing here. Additionally, the threat of new tariffs on key materials is adding further pressure to supply chains and cost structures across the industry. These factors are driving up costs across the precious metals sector, making it increasingly difficult to absorb additional expenses. Despite our best effort to mitigate these effects, the current cost structure has reached a level that is no longer sustainable. To ensure the continuity of our operations and uphold the high standards of quality and service you expect from us, we will introduce a temporary fee of $3.50 per ounce of gold. So that's about a 0.1%, a little less than 0.1%. I'm sorry, a little more than 0.1% fee on gold for all minted gold products. Now look at the silver one though. $3 an ounce of fee for silver minted products from argor-haraeus. Guys, that is almost a 10% fee they're tacking onto the price of silver. Why? Because of persistent inflation and geopolitical uncertainties and apparently this tariffs thing. But the tariffs thing is not having a direct impact on silver, right? We're reading about how cargo holds of planes are being filled with gold and that's being drained from the LBMA, but we're not reading about that happening with silver. They're just taking advantage of the hype of higher prices to arbitrarily jack up the price of retail metal by 10% here. And so, I agree with my friend Bob. This really looks like fear marketing is all this is. They're selling fear and they're trying to squeeze people for more money. Look, guys, don't let 2021 be repeated. All right. A lot of what happened in 2021, a lot of the money people spent during the silver squeeze, all it really ended up doing, people spent more than they had to on premiums that inflated the profit margins of the miners, or not the miners, the dealers. And well, let's just put it this way. You only spend money on premiums and shipping, and they're jacking up the premiums. So don't let them get away with it. I won't be buying any argor-haraeus metals anytime soon because I think they're ripping people off here. Let's talk a little bit about what's going on in Bitcoin. Meanwhile, $96,316. That is priced on Coinbase, up about $500 versus yesterday. But still, guys, Bitcoin is really kind of stuck in this narrow range that we've been in underneath the 50-day moving average for about 2 weeks here. just kind of stuck in no man's land. Speaking of Bitcoin, let's talk a little bit about Milei and his unforced error. Argentina federal judge to probe Milei's crypto scandal, and the stock index falls. Now, look, guys, when you promote a shitcoin, you are attaching yourself to it. If there is a meme coin has been released and then you champion this thing, well, you're hitching your wagon to it. And if that horse goes off a cliff, it's going to drag you with it. And it looks like that's exactly what Milei just did here. An Argentine judge was assigned on Monday to investigate President Javier Milei's role in promoting a cryptocurrency that crashed, the latest shockwave from a scandal that has threatened to slow the libertarian leader's momentum. Milei late on Friday recommended the little-known crypto coin Libra in a posting on X, kicking off a brief rally. He later deleted the post and denied having any link to the cryptocurrency, which soon plunged. It was a rug pull. The country's fintech chamber said the case could amount to a rug pull, a scam in which a coin's backers lure multiple investors, sending the cryptocurrency's value soaring, then quickly withdraw their funds, leaving investors with worthless tokens. Opposition lawmakers have said that Milei, whose tough austerity program has won plaudits from investors and made progress in taming rampant inflation, could face an impeachment trial over his actions. And that's the really sad thing, is now the Peronists, the socialists, all the people who made Argentina the CF that it is are going to latch onto this story, and they're going to use it to try to take Milei down. And what Milei has done, it hasn't all been good, but he's balanced the budget. He has solved the inflation problem, or at least he's brought inflation down by triple-digit percentages. He's brought it down. And now the story is not going to be the economic reforms. The story is going to be this stupid shitcoin. Guys, don't buy meme coins. Don't fall for this. Even if the person pumping it is somebody you like, all right, the person pumping it is not the person who owns most of it, is not the person who's creating it. There is almost always some development team trying to latch on to the notoriety of some celebrity. And then once you buy it, they're going to sell it to you. They're going to take the money out. Then they're going to stop pumping it and it's going to crash. We see this over and over and over again. And apparently you can put Javier Milei in the same category as Hawk to a Girl and Melania and the Donald. They're all doing this. They all end the same way. Now let's talk about this DC housing price thing. All right. First things first. Let's talk about the bearish side of things. All right. This was in Newsweek, dated yesterday. DC housing prices slashed as Doge targets federal workers. And that's kind of the story here. Elon and Doge and what Trump is doing, downsizing the federal government, it's causing a housing crash in DC. Listings in the DC housing market are surging and prices are being slashed as efforts of Donald Trump and Elon Musk to shrink the size of the U.S. federal workforce leave employees uncertain about their future. Newsweek contacted Zillow and John Burns Research and Consulting for comment by email on Monday. Here's what we know. As of early Monday morning, there were a total of 2,400 homes listed for sale on Zillow in Washington, D.C., 253 of which have been put on the market in the last 7 days, 461 of which in the last 14 days. More than half of the homes currently listed for sale on the platform, or 1,489, have been added in the past 90 days. Now, interesting, guys, note the data set here. This is Zillow data for Washington, D.C. Some homeowners in D.C. are not only apparently rushing to sell their properties in the city, but they're also willing to slash prices to attract reluctant buyers. Of the 2,400 homes currently listed for sale on Zillow, 426 have seen a price reduction. On Zillow, a two-bedroom, two-bath, 1,138 square foot condo in Southwest Washington was listed for $349,900 after a cut of $10,000, and a two-bed, two-bath, 1,574 square foot home in Northwest DC was listed for $1.39 million after the seller slashed the price by $60,000. All right, so we're seeing a little bit of data of price cuts here, not as catastrophic as some of the headlines I'm seeing, not exactly a crashing market, but a surge of inventory. Now let's talk about some of the bearish takes, or I'm sorry, some of the more bullish takes. DC housing market remains stable, no crash in sight, experts say. This is also dated yesterday. Now this is in Fox 5 DC, where they're saying nothing to see here. Fox 5 spoke to real estate experts and reviewed data to see how much truth there is to viral social media posts spreading misinformation about the DC housing market? Turns out not much. First of all, let me just tell you, anytime I see somebody throwing out the word misinformation, my alarm bells start going off, all right? Misinformation, that's like calling something a conspiracy theory in the 2020s. You are daring it to be true. So I'm automatically skeptical of anybody claiming to say misinformation. But here's what some of these housing experts that Fox 5 DC said. I've seen some posts where people are panicking, saying the DC market is crashing, and that is totally not the case, said Chris Paolini, principal real estate agent at Redfin. Bright MLS, which tracks all listings, says they are simply not seeing an inventory surge in the DC area right now. In fact, their data shows February 2025 and February 2024 are nearly identical in terms of homes for sale in the DMV. There were 2,829 listings that came onto the market in the 2-week period between February 3rd and 16th, compared to last year with 2,820 new listings in the market, according to Bright MLS. So these guys are saying, no, the surge in inventory is exactly the same as we saw last year. Now, you guys may notice the numbers are wildly different here. They're talking about 2,800 new listings in this article versus 1,400 and 2,400 new listings in the other article. Well, some are looking at Zillow data, some are looking at Redfin data, some are just pulling off of MLS, some are looking at maybe just the DC metro area, some might be including Northern Virginia, the Arlington area, where a lot of the high-end DC bureaucrats live. So what's really going on here? It seems like depending on whatever narrative you want to create, you can find data to fit that. But here's one thing that really interested me that stuck out at me this morning, all right? And that is this one in CNBC. Unemployment spikes in Washington, D.C. as Trump and Musk begin efforts to shrink the government. Now, this tells me there may be some credibility to this DC housing crash story because the housing market is going to follow the jobs market. President Donald Trump's moves to fire thousands of federal government workers have coincided with a surge in jobless claims in Washington, D.C. that could get worse as efforts intensify. Since Trump has taken office, nearly 4,000 workers in the city have filed for unemployment insurance as part of a surge that began at the start of the new year, according to Labor Department figures not adjusted for seasonal factors. In all, just shy of 7,000 claims have been filed in the 6 weeks of the new year, or about 55% more than the prior 6-week period. Filings rose to 1,780 for the week ending February 8th. That is a 36% increase from the prior week and more than 4 times the amount in the same period of 2024. So the DC area is seeing a big increase in unemployment claims. Now let's take a look at this chart that they're including. Now there's more questions in this chart here. Now this one, they're saying this is initial unemployment claims for the District of Columbia. All right, and there's your 1,780 for the week ended February 8th. That's the most recent data. And you'll notice that is a big jump from the prior week, a 36% jump. Now, here's what kind of stuck out at me about this one. And again, when you see unemployment claims rising, it tells me maybe the housing bears are right. But look at when this started. You could argue that this chart started to increase or that it bottomed out around December, November timeframe. But the first big outlier data point was on January 18th. Well, January 18th was 2 days before Donald Trump was inaugurated. So whatever is happening in the DC unemployment market, it predates Trump. Now, maybe this was people losing their jobs in DC because they were expecting Trump to come in and start cutting things. It's possible some people got out in front of it. Or maybe there's something totally unrelated going on in DC and the media just has their Trump goggles on, and so we're not seeing it. But whatever this is, it started before Trump took office. Now, it obviously got a whole heck of a lot worse after Trump took office. But the other thing, guys, is these buyouts that Trump has offered, right? There was like 75,000 federal workers took these buyouts. Now, not all of them were in DC. It's a good bet that some of them or a lot of them were in regional offices from all around the country. But those buyouts included people being paid through September. So they wouldn't be eligible for unemployment claims yet. And this latest data point, February 8th, that was before all of the probationary workers were laid off last week. So all of the actions that Trump has taken to shrink the size of the federal government would not be showing up in this unemployment chart yet. So I'll be honest with you guys. I don't know what to make out of this DC housing crash story. There's data supporting it. There's data that debunks it. And then there's this unemployment data that supports it. But the narrative being spun that this is because of Trump, the timeline does not jibe with that. So I got to be honest with you guys. I don't know what the heck is going on in the DC area. I can tell you at 10 a.m. Eastern time today, my friend Todd Sachs from Sachs Realty is going live to talk about the DC real estate market. Todd lives in that area and he services that area directly. So that's probably one you want to check out if you're interested in hearing more about this story. I don't know what Todd is going to say. I haven't spoken to him in a while, but check out that one and drop a comment. Let him know nobody sent you. All right, let's talk a little bit real quick. We'll go through these next few pretty fast here. Southwest to cut 15% of corporate jobs in first ever layoffs. Guys, that's the story there. First ever layoff. Southwest is a company that has prided itself for years that they have never laid people off, that they don't do corporate job cuts. Well, that is gone now ever since activist investors. What was the name of the activist investors at Southwest? I can't remember who it was. But Elliott Asset Management, that's who it was. Ever since Elliott took a stake in the company, they've been making changes. They got rid of their, pick your own seat thing at Elliott's behest. Now they're laying people off. The corporate carriers are struggling here because, well, poor people can't afford to go on vacation. These things have consequences. Southwest Airlines, though, stock is up 2% ahead of the opening bell. This market loves layoffs, and so the stock's trading at $30.91. Up by about 63 cents. Supermicro stock is rising again. Why SMCI investors are feeling bullish? I'll be honest with you guys. Why SMCI investors are feeling bullish is just because they believe Charles Lang. That's all it comes down to. They think the company is going to file their financials in the next 7 days. That's why, there's very little content in here. Supermicro stock jumped 57% this year through Friday's close, making the benchmark U.S. index's second best performer. Oh my God, the second best performer in the S&P 500 is a company that is on the brink of being delisted for accounting fraud. Take from that whatever you want. The bulk of the gains came after the second quarter business update, where the company guided for $40 billion of revenue in fiscal 2026, which was way above analysts' expectations. And that stellar outlook has helped ease worries about SMCI's recent accounting issues, although questions remain. The company has a week now, guys. They got 7 days to file this thing. It's been 6 months. They still haven't done it. No auditor has signed off on any of their books since that Hindenburg report was released. But look at the stock this morning. It's up 8.5% right now. It's pretty volatile. It's swinging like crazy, but the opening bell just rang. Stock is up 7.8%, $51.66. Look at the year-to-date performance of this company that is on the brink of being delisted for accounting fraud. Well, tell me it's a bubble without actually telling me. Speaking of fraud, Singapore buys only a small amount of NVIDIA chips, an official says. This is another one I just did a video about in the last few weeks about, the dirty little secret, the worst kept secret in Wall Street, that NVIDIA and Supermicro are blatantly violating export controls with impunity. Singapore accounts for only a very modest portion of NVIDIA's revenue, according to a senior official, as Washington is looking into whether Chinese AI startup DeepSeek has been securing chips in the Southeast Asian country. The physical delivery of products sold by NVIDIA to Singapore represents less than 1% of NVIDIA's overall revenue in the 3-month period ending October 2024, said Tan Si Leng, the island nation's second minister for trade and industry. Tan added that while NVIDIA attributed 22% of its sales in the August to October period to Singapore, the country was where NVIDIA's customers only received their bill. And we talked about that in that video I did about the export controls. But look at this, less than 1% of the physical product is actually shipped to Singapore, even though 22% of it is billed there. Now, Singapore says, oh, don't worry, that's going to the West. It's going to the United States. It's going to countries where it's totally legal. That's obviously not true. All right. These chips are ending up in China in huge quantities, and it's pretty obvious what they're doing to anybody paying attention. But, number go up so people don't want to look. The only thing I would add, guys, is if you listen to J.D. Vance's speech over the weekend in Europe, he made very clear that the United States is taking export controls seriously, very seriously, and that they're going to start cracking down on this stuff. Now, does that mean they would be willing to pop their AI stock bubble in order to prevent these chips from falling into the Chinese military's hands? I don't know, but keep an eye on that one. And last but not least, Norinchukin CEO plans to resign after massive bond losses. Look, guys, we covered Norinchukin on this channel quite a bit last year. They kind of fell out of the news over the last few weeks. Norinchukin lost a ton of money with long bets on U.S. Treasuries. And the bank sold their U.S. Treasuries, and then they piled into CLOs, collateralized loan obligations, which is basically commercial real estate debt. All right, Norinchukin is like the biggest investor of U.S. commercial real estate CLOs in the world, and now their CEO is abruptly resigning. So he's kind of taking the fall for the bond losses. I don't know what this means, but keep an eye on Norinchukin. Whenever you get a change in the CEO at a big bank like that, it's worth keeping an eye on. I don't know if this is just him taking the blame for what happened last year or if he's trying to get out before something else happens. But keep an eye on Japan and that yen carry trade concept. And I just want to say thank you very much to Nashville Pasta Man. Voice is G8'd. You see the CoreWeave Fidelity buyout. Okay, the CoreWeave Fidelity buyout, Nashville, check the date on that tweet. You sent me that one yesterday. I meant to reply, but it was really late when I saw that one. That's the CoreWeave Fidelity buyout was from like December of 2023 was when CoreWeave got like a $7 billion valuation from Fidelity. They have since gotten more than a $23 billion valuation from other investors. That was last year in 2024. And now they're kind of quiet. CoreWeave has been very silent about their IPO. They were rumored to be going after a $37 billion valuation with their IPO, but they haven't said a word since DeepSeek came out. So, you know, if these data centers are not going to be as in demand because DeepSeek has lowered the demand for compute, then a company like CoreWeave is in big trouble because CoreWeave borrowed over $10 billion collateralized by their GPUs in order to build out their ridiculously paced data center build out. They're levered up to the hilt. And if DeepSeek changes the business case for data centers, then CoreWeave is going to be the first one to suffer from that. But check the date on that tweet that you sent me. I think that's what you're referring to there. Thanks again, Pasta Man, for supporting the channel. T.A. Chapman says, well, if President Musk, see what you did there, fires all the federal workers, of course, D.C. housing is going to crash. Happy belated birthday, Jack. Well, thank you for the belated birthday wishes, T.A. Chapman. Look, I agree. Like, you know, if they're downsizing the federal government, it would result in the D.C. housing market crashing. But that said, the timing isn't lining up here. The fact that the unemployment started to spike before Trump even took office, something else is going on in D.C. I don't know what it. Maybe it was just people front running the move and with what Trump was doing. Maybe people were closing up shop before the guy got there and they were heading for the hills. Entirely plausible. Or maybe there's something we haven't seen yet that's about to go pop in D.C. I just don't know. I do know that the people who are saying, oh, everything is normal and everything is terrible, you can massage the numbers on Zillow and Redfin. You can zoom in, you can zoom out, you can include this municipality, but not this one. And you can make that data say whatever the hell you want it to say. So I am not convinced either way of what's going on. But I agree with your sentiment. Over time, if they are serious about downsizing the federal workforce by up to 10%, which is what they're proposing, you better believe that's going to send the D.C. housing market lower. Absolutely. Thank you, T.A. Chapman, for supporting the channel and for gifting 10 Nobody Special Finance memberships. Thank you very much, sir. I appreciate that. And guys, if you receive one of those memberships, be sure and say thank you to Mr. Chapman. Pasta Man is back, says, anecdata, a buddy closed his electrical contracting business in D.C. People aren't doing remodels, laid off 10 electricians. People are hoarding cash, CRE. You know, I agree people aren't doing remodels. People just don't have money to do remodels anymore, right? Everybody did their remodels in 2020 and 2021 when they were locked inside. And then life got a whole hell of a lot more expensive. And I just think the average person doesn't have any extra cash to do those remodels that he wants to do anymore. So that's probably contributing absolutely. Again, the DC, I just don't know on the local front what's really going on in DC. Check out that Saks Realty live stream in a few minutes here. People are definitely hoarding cash. Those who can are hoarding cash. Warren Buffett, chief among them. Commercial real estate is a big question. It was kind of funny, but there was this hot mic, expletive-laced rant by Jamie Dimon over the weekend, and he was like screaming about work from home, and he's dropping F-bombs left and right, and he's bad-mouthing young workers and everything. But, he's basically saying, look, nobody freaking does anything and work from home. Everybody's just sitting on the Zoom, flicking through their phone, not paying attention to what's going on in the meeting. And he's ordering everybody back to work. He's saying we didn't become the biggest bank in the world by doing that crap. He used stronger language than that. And the whole time I'm listening to this rant from Jamie Dimon, I picture Steve Schwartzman and who are the other? Basically, commercial real estate guys were listening to that rant saying, we're back. Oh, yeah. Because Jamie Dimon is adamantly opposed to work from home, as is the president right now. And we are starting to see that work from home thing. It's probably never going to go away entirely, but it is swinging back the other way. That's bullish for commercial real estate. Now, commercial real estate still has big problems like the change in interest rates, like we have way too much retail space. So I'm not going to call a bottom in commercial real estate, but there has been some good news in commercial real estate, at least in the last couple of days here. That being said, guys, there's still a huge reckoning in CRE. There has been just absolutely no price discovery. The very little bit of price discovery we've seen says that these buildings are worth 10 to 30% of what they were worth just a few years ago. Thank you again, Pasta Man. And the Dragon of Revelation says, can I get a Yellen or a Powell voiceover? Man, my throat is still pretty sore. But I do believe Secretary Yellen is enjoying her retirement, and she's made a few $1 million in speaking fees, speaking to banks in the last couple of weeks. Now that she's no longer a government employee, she can collect on all those services rendered during her tenure as Secretary of the Treasury in the Federal Reserve. And Chairman Powell remains acutely aware of the pain and hardship that inflation has caused the average American, and we remain squarely focused on our dual mandate of price stability and maximum employment. That's exciting words from Chair Powell, man. I tell you, that guy, he can really carry the room, can he? The exciting tone of voice. I haven't seen such public speaking prowess since Al Gore. Thanks again for the Super Chat, Dragon of Revelation, and thank you, Steve Woitis, who says, regarding USA debt, there's a rumor that the current administration may monetize part of U.S. gold reserves to cut bond yields. Can you explain this? Okay, so let's talk a little bit about that. I don't think that's the direct cause and effect, although Bessent, the Treasury Secretary, he does want lower long-term interest rates, as does Trump, and they pretty much told us that they plan to monetize the gold reserves. When you monetize gold reserves, you're not selling gold. You're not even really increasing the price of the gold. You're just printing money. That's all they're doing, right? The gold that the U.S. Treasury owns currently sits on their asset sheet, on their balance sheet in the assets column at $42.22 an ounce. They're talking about revaluing it to something closer to market conditions. Now, when they do that, they would issue gold certificates to the Federal Reserve, and the Federal Reserve would take those gold certificates and deposit up to $800 billion into the Treasury General account. The gold doesn't change hands. The Fed doesn't own it. They just have the gold certificate. It's just an accounting gimmick. There's no gold physically moving anywhere. The government isn't selling it. They're just printing hundreds of billions of dollars. Now, they would use those printed hundreds of billions of dollars to avoid the debt ceiling for several months. So what are you going to see if that happens? Excuse me. You're going to see Treasury issuance go down. There will be less new supply of U.S. government bonds hitting the market because the government won't be borrowing. They'll be spending money that was monetized. So what happens to the price of something when the supply goes down but the demand stays the same? The price would go higher, wouldn't it? The price goes higher, the interest rate goes lower. And so the net effect, yes, would be that those bond yields would head lower in that scenario. And guys, all I can tell you is that is highly inflationary. You're looking at extra money printing and lower interest rates, both things that cause inflation. And I said it during the election, it didn't matter matter who wins. If Kamala wins, she's going to inflate. If the Donald wins, he's going to inflate. And that's what's happening. All right. It looks different. They're using different avenues. But at the end of the day, it's the Fed monetizing assets. All right. Now, I would throw out the Fed can refuse to do this. That would be an interesting take. Jerome Powell can decide it is not squarely aligned with our dual mandate of maximum employment and price stability, and he can refuse to accept those gold certificates. And, well, that would be just hilarious. And I'm sure hijinks would ensue if that happened, because I doubt that Donald would be quiet about that. Thank you, Steve Woitis, for super chat support of the channel, sir. And thank you to Jason Charles. Says, can you provide any guidance on the best places online to buy this shiny physically? No biggie if that feels too much like financial advice. Thanks. Okay. All I can tell you, Charles, is it changes daily. All right. It's never the same place twice because they're always changing their promotions and everything. Watch out for your shipping costs and shop around. That's all I can tell you. I bought from several. I bought from JM Bullion, SD Bullion, Silver Gold Bull. There's a couple other ones over the years. All right. I don't buy from the same place every time. There are some places, some websites where you can compare silver prices where, kind of like a kayak for gold and silver. Well, they'll give you the lowest price per ounce in several different places all at once. It's never the same website. I can tell you, though, it sure as heck won't be argor-haraeus with what they're doing right now. Shop around is the only answer I can give you, and that's the only right answer in this case, because the guy who was the best deal yesterday will not be the same one today. Thank you very much, Charles, for supporting the channel, sir. Arbitrage says, here's my vote for the replacement of Janet Yellen's impression. Should be Pam Bondi or Kristi Noem. Give it a shot. Check. I haven't listened to either of them enough to do an impression, to be honest with you. So I really couldn't even take a shot at them. And why do they all have to be women? Look, a 6'1", 240-pound guy is not supposed to sound like a 5'0" woman. It's just Secretary Yellen has one of those voices, man. I don't know what to tell you. I'll take a look at Bondi and Noam, but honestly, I haven't listened to them enough to be able to do an impression. Sorry. Best I can do is another Yellen. Thank you so much for supporting the channel. And by the way, our banks remain strong, resilient, and well capitalized. Best I can do. Don't know him. Can't do Bondi. Thanks, Arbitrage. And thank you, everybody, for having your coffee with the Melonheads this morning. Sorry we ran a little long today. Appreciate all the generosity and the super chats as well. Thank you to my magnanimous Melonheads on Patreon and YouTube. You guys rock. Thank you so much. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Till next time, everybody, live small and dream big.